We actually have turned more cautious, and there's a couple reasons for that. One is, as you mentioned, the recession that we've been waiting for and waiting for, which never seems to arrive. But if we do have persistently strong inflation, that then raises the risk the Fed has to hike more in order to slow down growth, which then brings you to the recession. So we still feel eventually we will get there. The thing that's really made us a bit more nervous in the short term is the leadership of the performance for the index so far this year. We're all aware that it is almost entirely dependent on tech, that outside of the technology sector, returns have been negative. So that really doesn't give you a lot of confidence that you're going to see continued gains from here when it doesn't have that broad-based support across the market.
Let me dig into what's happened in tech. Tech has clearly been the outperformer, as you said. How crowded, though, are the U.S. tech names? We had a guest on yesterday who said, actually, even though they look pretty frothy, there are still a number of investors who are not in these names.
Potentially, when you hear the phrase, it's different this time, one should worry whether or not they're frothy. I mean, certainly valuations are much higher for the tech sector, and that raises the valuations for the S&P as a whole. If you look at the valuation of the rest of the market, it's actually very near the long-run average. So outside of tech, we're not concerned about the valuations. It really is an earnings story right now. So on both fronts, if we go into recession, is the rest of the market going to be able to put up the earnings growth that you currently see in consensus estimates? And even on the tech side, we have this enthusiasm certainly around AI. Tech did do better with the results in the first quarter than expected. But from here, are you going to see significant upward revisions? And again, we're skeptical that that will happen.
We've got right now on the screen a look at the big tech performers this year. Meta up more than 119% this year. So clearly a lot of that, a lot of those upgrades are already priced in. Daniel, let me take you to China, because reading through your latest commentary, it stuck out to me that you're more bullish than consensus on the Chinese economic outlook. Where do you diverge from consensus? And is this a call based on the expectation of policy support coming through?
Well, that's certainly one thing you would anticipate if growth continues to disappoint. If you look at the returns for emerging market equities in a kind of the opposite way, it is similar to what you see in the U.S. by sector. EM equities are up modestly this year. Of course, China is down quite a bit. But if you take China out of the EM index, EM equities are up 4%. So the underperformance you've had is really almost entirely China. So the question, of course, then is that going to change given the disappointment that we've had so far? We think it will. I mean, even if sentiment currently is negative towards China, we think earnings are what are going to matter in the end. If you look at consensus earnings expectations for growth for Chinese equities this year and next, it's around 15%. So even if that is revised down, that's still a pretty robust figure, particularly compared to what we think you're really going to get in the US and Europe. So we're overweight EM Asia as a whole, and the other parts of the Asian market have done well, in particular Korea and Taiwan. And so what the last leg here is to see a turnaround in sentiment towards China.
It's interesting you say that, because it feels like consensus has actually shifted the last couple of weeks to be slightly more bearish on China. The activity data coming out of China has surprised mostly to the downside, with the exception of last night. Let me ask you, what is the best way to express a positive China view going into the second half of the year?
Well, the way we're choosing to do it is through an overweight to EM Asia more broadly. I think we don't necessarily want to make such a concentrated bet on China. Of course, there's going to be a spillover from Chinese growth to the rest of Asia. In any event, we want a diversified allocation. So we think that's going to be the best way, hopefully, to pick up the upside that we do believe is still there.